Welcome back. Mitch Argon here with Calneva Realty. I'm going to take you through the Reno Tahoe real estate market in just a few moments. Okay, let's get started. First off, we're going to take a look at median price. And what you can see is that in general, the trend is for the median price to be moderating. These percentage gains here are down into single digits with a few exceptions. That's what we would expect as we're seeing the markets cool. You will notice that Carson City and Carson Valley both had median price highs. Those are all-time highs. The Carson Valley number is quite large, and I believe that will be probably a one-month anomaly. I don't think we're going to see the median price in this range. Just happened to be kind of an unusual month, so it spiked up. That will probably come back down into line to where it's been in the last few months, in the months going forward. Dayton, you can see, had a -2%. I believe that's probably a little bit of an anomaly as well. I think it's probably going to come back into the positive and be just about in line with some of the other markets. And Fernley, of course, leading the pack at 15%. I want to share this chart with you because in many cases, we're looking at the median price on a year-over-year basis. Well, a year-over-year is a good reference point, but this is actually more of a real-time view of what's happening in the markets. And you can see over here on the far right, this shows each of the markets that are in our region with the exception of Tahoe. Here's the Carson Valley spike up. You can see Reno is down a little bit, coming down from the 630 range up here down to about 600, 595. These other markets are kind of mixed up and down and a little bit flat. So what we're seeing is the market's flattening out, and that's what's creating this lower year-over-year percentage. Not seeing a giant drop, not seeing it fall off the cliff, but we are seeing stabilization in the pricing. In terms of homes sold, looking at this column right here, we did see a substantial drop again in July of 2022 over July of 2021 in the volume of homes sold. You can see a lot of those numbers are starting with 30%. In the case of Fernley, it's starting with 50%. So the increase in interest rates has impacted the demand in the market, and it's showing up here in terms of the homes sold being quite a bit less from where we were a year ago. That being said, this month was probably down, say 30%. So for every 100 homes that was sold a year ago, we're seeing 70 homes sell currently. So while the markets are down, while demand is down, they are still reasonably active, and the market still move forward. I want to show you this chart here. This shows you inventory in the marketplace, and you can see that there's a curve that goes here. It's seasonal. You'll see inventory building through the spring and into summer, then coming down again during the winter months each year. The difference this year, of course, is that this rise that we're seeing in through here, and I'm focusing on just the Reno blue line right here, but they all will follow a similar line, is going up much, much higher than what we saw last year and the year before, where inventory levels were quite low. So inventory is rising as demand has come off. That's creating more options for buyers and more competition for sellers. You will notice that the most recent month rise over here, at least in the Reno market, is tapering off a little bit from what we had seen in the prior 2 or 3 months. So it leads towards looking like if that trend continues, we'll be reaching a little more of a point of stability with regards to inventory. Month supply of inventory, you can see up quite a bit from a year ago, trading here in the low 2 range, low to mid 2 range for the most markets. Tahoe is typically always a little bit higher than the other markets in the region. So that's at 5.4, probably will be a little bit higher because it typically is. So we're still in seller market territory because we're under 4 months, but this is also stabilizing a little bit too, which I'll show you on this next chart. This shows a month-by-month view at that month's supply of inventory. And what you can see here is that we've had a pretty good rise coming through here during this high rate of change when the rates have come up. But you'll see all these numbers starting to flatten out or moderate a little bit further here in the July and August timeframe. So much like the inventory had a steep rise and it's starting to level off a little bit, we're seeing the month supply of inventory doing the same thing. So it looks like we're moving towards a little more of a point of stability. And we went through a high rate of change over the last 3 months. And so things are starting to stabilize down a little bit as we move forward. As I mentioned, prices peaking in select markets, that is carryover momentum. That's not from demand right now. We're not seeing the multiple offers and things that are driving the prices that we were seeing as little as 3 months ago and for the last couple of years. Inventory gains we talked about, still rising over 2021, but it's starting to plateau or starting to become more modest over June, just last month of 2022, June, July. Home sold demand, as I mentioned, down 25 to 30%, and that month supply of inventory. So if you are a buyer in today's market, there's a few things to keep in mind. You do have more choices. You have less competition. So it means you're probably going to have a little more negotiating leverage, not as much as you might think, because sellers are still holding on to their numbers pretty tight. But you will have more negotiating leverage than you would have had as little as 3 months ago, or certainly over the last couple of years during the traditional pandemic as we're looking back at it now, period. It's important to note that even though rates have gone up, they have stabilized and come down just a little bit actually this week. But in many cases, sellers are offering to pay credits towards the buyer's ability to buy down a rate. So we are seeing rates going down on these buy down programs, sometimes into the high 4% range. So if you need to buy, it's not all bad news. There's some options for you. There's more choice, and you have less competition, and you may be able to get the rates down to what would still be considered to be a pretty good rate with a buy down, in many cases offered by a seller, both new homes and resale homes. If you are a seller, of course, you can see that inventory rising as I showed on the chart. There's more competition, and buyers are not as available and as active as they were as little as 3 months ago and going back for the last couple of years. So it's really important if you're a seller that the home is properly photographed, that the home is properly priced and is being promoted, because you will have fewer opportunities to attract a buyer. There's fewer buyers in the market, and you got more competition. So just a couple of things to keep in mind if you are in the market right now as an active buyer or an active seller. That wraps it up for this month. I hope this has been useful for you. I've shared a few more charts than I usually do. Again, all these charts are down below. There's a link down below here on YouTube to the Greater Reno Tahoe Real Estate Report. We publish that every week, or I'm sorry, once a month. And it's got about 30 pages of charts and graphs that break out all these details by each of the markets in our region. If you're interested in doing a deep dive, I suggest you take a look. Thanks for your time. I appreciate it. We'll see you next month. Have a great day.